Ben ritrovati mercoledì mattina su Florida e New York Stock Exchange. L'attenzione è sicuramente ancora rivolta all'Europa, indici che fanno fatica quest'oggi a recuperare terreno dopo 3 giornate consecutive di guadagni. I dati economici deludono ancora una volta e non bastano le indicazioni positive che arrivano da alcune aziende. Ne parliamo con il mio ospite come ogni mercoledì, è Gregory e Keating, Managing Director per James E. Coffey Securities. Greg, thank you so much for being with us again.
Thank you.
So Greg, I was just saying that this morning some economic figures that are disappointing, some good earnings, some bad earnings from Apple. Tell me what is going on the market today.
A lot to digest this morning. Obviously, all eyes were on Apple last night when they reported. Disappointing. Market seems to have rebounded. A lot of that has to do, I think, news out towards the end of the day yesterday. Rumors of a Wall Street Journal article and talk this morning of it. Further easing. Obviously, disappointing housing data. Market took a little bit of a hit after 10 o'clock when those numbers came out. So a lot to digest. Market is up a little bit here. It's just, hopefully we can end this 3-day triple-digit loss trend in the Dow.
And maybe in a way, the data that we have seen this morning on the housing sector, they can actually make it even more, the market more optimistic on a Fed move.
I think that's the whole thing. I mean, it seems like an upside down world when you think bad news could actually be good news for the market, not good news for the economy. But basically more a trend where lower growth in the economy here can lead to more quantitative easing, which would be a positive for the market. Is it a long-term solution? I mean, the fact that we're talking about QE3, probably not. But right now, I think the market is looking at that as a positive.
And they're not talking about QE3 only. I mean, last night that we heard Bernanke at the Congress, he was mentioning other measures, even though for banks it's already very cheap to, get loans from the Federal Reserve, and we know that all the mortgage rates are already very, very low. So there is really not much room for the Federal Reserve.
I think that's an argument. How many more tools does it have left in the bag? I know they were looking at a program that the Bank of England has going right now, and it remains to be seen what other avenues it will explore. Right now the QE3 talk has gotten the market up a little bit, but I think the overall outlook is very negative. Whether it's the economy here, I think the earnings have beat for the most part, but it's lowered guidance and lowered the estimates, and you can't hide the fact that the trend in revenue growth is slowing, and that's the real problem, I think. And then add to the mix that the problems in Europe obviously are not going away.
Also, you were mentioning Apple earnings. One of the reasons why Apple saw a very sharp decline in iPhone sales is not just the rumors that a new iPhone is coming by the end of the year, but also the demand in Europe. Countries like Italy, like Spain, there is no demand. People are not really buying expensive items because of the uncertainties. So do you think that really a new iPhone at the end of the year can lift up Apple?
I think a lot of people are drawing comparisons to around the third quarter last year with Apple, where they said new sales of iPhones were down because of the 4S that was coming out. It remains to be seen, obviously. Apple it's a tough stock to short, obviously. I mean, it's been an absolute beast. But it's been riding the Nasdaq higher, and it is disappointing. But you know what? You never know. I mean, with the new iPhone, talk of that new iPhone being open to the China mobile users, so that could be a huge boon for the stock if that does remain to be true. But we'll see. Time will tell with that.
So where are we heading this week? I know that there is a big numbers coming at the end of the week with the GDP. What do you expect the market going?
Big numbers, GDP Friday. Obviously, keep an eye on the initial and continuing claims tomorrow. I think the GDP is lower guidance. I think they're looking at a 1.4% annualized number. It's not strong, and we need revenue growth. We need companies to make profits. You need people working again. So it doesn't. The outlook. I keep saying the outlook. It's just not positive right now.
And very soon politics will kick in. I keep saying that probably we're going to have maybe another month Of course, people will look at Europe. We know now the earnings season will eventually be over soon, and the attention will turn to Washington, to the polls, and to what is going on.
I think so. I think anytime you have a market that's counting on politics or issues to go higher, I think you have a major problem there, and that remains to be seen with the fiscal cliff. Obviously, at the end of the year, of course, they're not going to do anything about it now. There's going to be a lot of talk about it. They're going to wait till the final hour. But I think right now, without earnings leading us to higher, I think we got a long summer. The long second half of the summer coming up.
That's going to be exciting, though. Thank you very much, Greg, for being with us.
Thank you.
E grazie a voi per l'attenzione. A domani.